MVRV annual line fell, buying momentum was insufficient and buying was stagnant, and the inflow to the exchange shrank. Is this a signal of the end of the bull market, or a buildup of momentum before the next wave of market movement? Bitcoin's callback caused controversy. Tim Draper supported it. The best way is to buy. Galaxy, Jump, and Multicoin have joined forces to stockpile SOL. Is Solana about to take off? 4% of the world's mining scale. How many bitcoins does it have? Japanese yen stablecoin JPYC to launch in fall. Is Monex ready to take advantage of the stablecoin trend?
Wednesday, August 27th, BitcoinTV English channel. Where is the coin chain? I'm Michael, and I'm here to share the 24-hour cryptocurrency headlines. Bitcoin's MVRV ratio recently fell below its 365-day moving average, and many are starting to panic, wondering if the bull market is about to end. Historically, during a bull market, MVRV generally remains stable. Above the 365-day moving average, it means that the valuation is expanding, but this wave has been moving towards lower highs since the MVRV reached 2.77 on March 11, 2024. If it falls below now, it may accelerate the correction since the high of $124,400. What's worse is that this indicator has been suppressed by the downward trend line for several quarters, and the upward momentum is obviously insufficient. The good news is that ETF funds are still flowing in, institutions are increasing their holdings, and retail investors are becoming more and more active, so MVRV alone can no longer fully explain the market. It should be noted that if it stays for a long time below the 365-day moving average, the market may not be experiencing a healthy correction, but rather a midterm correction. However, at this point, it appears more like a critical correction within the bull market, not a top. The long-term trend remains resilient, but short-term fluctuations and corrections are necessary to build momentum for the next wave of higher highs. Another on-chain alarm bell has sounded. Bitcoin's taker-by-sell ratio recently fell to 0.90, its lowest level since reaching $69,000 in November 2021. How should this be interpreted? A reading above 1 indicates stronger buying, spurring a rally. A reading below 1 indicates selling pressure is overwhelming buying, potentially leading to a market reversal. Now below 1, this indicates active selling far outweighs buying, prompting a reluctance to chase higher prices. Although Bitcoin remains above $110,000, market sentiment has lagged, similar to the 2021 peak. The last time the ratio dipped this low, a prolonged bear market followed. Now reaching a new low, the signal is simply dangerous. Selling pressure is slowly building, and the market may experience more volatility or even a periodic correction. The latest data on the chain shows that the inflow of Bitcoin exchanges, the 30-day moving average, has fallen to its lowest point since May 2023. What does this mean? It means that there are significantly fewer people actively transferring Bitcoin to exchanges to sell, and the market selling pressure has eased. More and more people are holding their coins in cold wallets for a long time, and the HODL sentiment is stronger. Now Bitcoin is stable in the $110,000 range, and the inflow continues to decline. The spot supply that can be sold is getting smaller and smaller, and the price base is more stable. As the main channel for institutional investors in the United States, Coinbase's declining inflows indicates that institutional selling pressure has weakened. Binance data is also sluggish, further confirming that global selling momentum is receding. Overall, the inflow into the exchange has hit a new low, sending a signal of chip tightening. If this trend continues, there will be a chance for Bitcoin to go higher after the medium-term correction. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the past 24 hours. Click the bell to join our channel and become a member. You'll receive your membership code Monday through Friday. The September curse has struck again. On Monday, the market suddenly slammed on the brakes. Bitcoin plummeted below $110,000, hitting a low of $109,324, its lowest point since July. Ethereum also failed to hold up, falling below $4,400, a nearly 8% drop in 24 hours. This wave of market volatility swept the entire market. Looking back at history, 2013, 2017, and 2021 all followed the same pattern. A summer rebound followed by a sharp correction in September. The question is, will history repeat itself this time?
Renowned Silicon Valley venture capitalist Tim Draper recently spoke with the media about crypto market trends. He admitted that his previously proposed target price of $250,000 for Bitcoin might take longer to achieve, but his confidence in the long-term trend remains unshaken. In response to the host's question about market volatility, Draper emphasized that Bitcoin's market share has increased from 40% to 61% to 62%, clearly demonstrating that both capital and market consensus continue to converge on Bitcoin as a core asset.
Really major. One is Bitcoin's going to completely transform the economy. One is that AI is going to take all our jobs. And one is that stem cells are going to make us live forever. So Bitcoin, live forever, and lose your job.
Historical data is truly heartbreaking. Bitcoin has fallen in September in most years, with the exception of 2023, when it saw increases of 3.91%, and 2024, when it saw increases of 7.29%. Ethereum is even worse, with September declines often being even greater. It saw drops of 21.65% in 2017, 17.08% in 2020, and 14.49% in 2021-2022, each wave more severe than the last, almost always underperforming Bitcoin. As for Tim Draper, his price predictions often fall short, but the direction remains correct. He prioritizes fundamentals: the increasing computing power of miners, the wider distribution of nodes, and the growing developer community. These are the true strengths that underpin Bitcoin. Michael Saylor's strategy for hoarding Bitcoin has ignited the market, with an increasing number of institutions using publicly listed companies to aggressively acquire the cryptocurrency. The immediate effect has boosted both Bitcoin and Ethereum. Ethereum-focused treasury companies alone have accumulated $20 billion in ETH, pushing it to a new all-time high. Solana, on the other hand, hasn't fared so well. Over the past 2 days, it has plummeted from $213 to $187, a drop of nearly 12%. The gains from Powell's Day are in sight, and the company is struggling to maintain support at key support levels between $170 and $180. On-chain data shows that Solana's liquidations exceeded $210 million, or approximately 1.03 million SOL over the past week, significantly increasing funding pressures. The question is, what new news can Solana rely on to turn things around?
According to Bloomberg, Galaxy Digital, Jump Crypto, and Multicoin Capital are advancing a $1 billion financing round to acquire Solana, aiming to establish the world's largest Solana reserve. The three institutions have tapped Wall Street investment bank Cantor Fitzgerald as lead underwriter. If the transaction is completed in early September, the reserve will be more than double the size of the existing largest Solana reserve pool. The three giants manage a combined total of over $25 billion in assets. Once the project is launched, it is expected to generate strong demand for Solana's secondary market.
If this wave of institutional reserve plans materializes, Solana's spot supply will be even tighter, making its price more resilient. $1 billion in Solana represents approximately 0.9% of the current $11 billion market capitalization. A concentrated lockup would have a significant impact. However, Solana has already plummeted 12% from its peak, presenting a compelling opportunity for discerning investors to invest at a low price. More importantly, institutional vaults backed by the Solana Foundation are gradually accumulating Solana, and trading volume on the ecosystem's DEX is also leading. Over the past 30 days, Solana DEXs have generated $6.41 billion in trading volume, surpassing even Ethereum's $6.14 billion. Meanwhile, the SOL ETH exchange rate is approaching historical support at 0.043. These signals suggest that fear is slowly turning into opportunity. If trading volume continues to increase, coupled with institutional buying, Solana could very well reach a structural turning point.
The list of national team currency holdings has begun to emerge. After the EU, which other invisible whales are there? With the Financial Services Agency giving the go-ahead for institutions to increase investment, can Japan trigger a new round of stablecoin boom?
The UAE has been actively pursuing Bitcoin mining in recent years. Last year, its mining capacity reached 400 megawatts, accounting for nearly 4% of global computing power. More importantly, their abundant energy resources, including natural gas and nuclear power, and the support of semi-governmental projects, have fueled the expansion of their mining business. Furthermore, blockchain is being directly applied in finance. In March of this year, Abu Dhabi's HKEX fund invested $2 billion in Binance. Therefore, many have long wondered how much Bitcoin the UAE actually holds. Now, the on-chain analysis platform Arkham Intelligence has provided a definitive answer.
Blockchain analysis platform Arkham Intelligence announced that it has discovered approximately 6,300 bitcoins in wallets controlled by the UAE government, worth approximately $700 million, primarily from mining operations. The bitcoins were mined by Citadel Mining, a listed company. As early as 2022, Citadel partnered with Phoenix Group, a UAE-listed company, and an international holding company, IHC collaboration to establish a Bitcoin mining farm in Abu Dhabi. Satellite time-lapse imagery confirms the mining timeline. A majority of Citadel's shares are held by the UAE Royal Group. Through IHC,
today, the UAE is the most crypto-ready country in the world. They have government initiatives, blockchain initiatives. They have created regulatory frameworks in Dubai and Abu Dhabi. They've got domestic Bitcoin mines here, so they've got the Bitcoin infrastructure here.
Looking globally, the landscape of national Bitcoin reserves is becoming increasingly clear. The United States remains the leader, holding approximately 198,012 bitcoins, mostly seized from criminal cases. China is second, with approximately 194,000 bitcoins, primarily from the Plus token scam busted in 2019. The United Kingdom ranks third, holding 61,245 bitcoins. The UAE was previously rumored to hold 420,000 bitcoins, many of which were seized from criminal cases. However, recent data from Arkham Intelligence directly contradicts this claim, bringing the numbers back to reality. According to Bitbo, the UAE currently ranks only 6th globally. This raises the question, are there any undisclosed hidden giants on this list of national Bitcoin holders? Japan's stance on stablecoins is becoming increasingly relaxed. The Financial Services Agency FSA may approve the issuance of yen-denominated JPYC as early as this fall. This prepaid stablecoin, pegged 1-to-1 to the yen and issued by JPYC Inc., a domestic company, will be considered one of Japan's first truly compliant domestic stablecoins. This is the first time Japan has allowed the implementation of a stablecoin pegged to fiat currency. There were already signs of this trend. Japan lifted its ban on foreign stablecoins in 2023, and in February of this year, a working group report recommended easing regulations, paving the way. Monex Group is also moving quickly, preparing to jump in once the new regulations are implemented to capitalize on this stablecoin boom.
According to TV Tokyo, Monex Group Chairman Matsumoto Oki stated that the company is considering issuing a yen-pegged stablecoin in Japan. If implemented, it would be backed by assets such as Japanese government bonds, exchanged 1:1 with the yen, and could be used for international remittances and corporate settlements. Monex already owns the local exchange CoinCheck and the securities brokerage firm Monex, hoping to leverage this to expand the influence of its stablecoin offerings.
Stablecoin technology in Japan, which is obviously taking off around the world, and we're really pleased to be working with all of these industry leaders.
Yeah. Monex Group, a long-established financial company, is really trying something new. It already serves over 3 million users through TradeStation and CoinCheck, and is well-versed in both crypto and traditional finance. Now, it's developing a Japanese yen stablecoin, directly bringing the yen into the $270 billion global stablecoin market. USDT and USDC alone account for 85% of this market share. Chairman Matsumoto Oki has also announced that the company is in talks to acquire a European crypto company, with an official announcement expected within days. Remember, CoinCheck Group only listed on the Nasdaq at the end of last year. If this acquisition goes through, Monex will be able to expand its presence in the US, Japan, and Europe. Combined with the launch of its stablecoin, its global influence will reach new heights.
The Federal Reserve stated, "A seat on the Board of Governors isn't something the president can just fire. There must be a solid reason." Counselor Cook quickly called in his lawyers to the court, and the Fed calmly responded, "We will comply with whatever the ruling is." The US CFTC has lost another key member. Commissioner Kristen Johnson has set her departure date as of September 3rd, leaving the leadership team with only one person to hold the helm. This wave of departures has intensified the already short-staffed derivatives regulatory landscape. Play Solana officially announced. The first handheld gaming console, PSG-1, is scheduled to ship on October 6th. It comes with a built-in Solana wallet, allowing users to manage on-chain assets while playing games, giving them the feeling of playing Web3 on a portable device. UK users can now stake ETH and SOL on Gemini, earning daily rewards and tracking their earnings anytime through the app. Gemini also just opened its first office in London, continuing its expansion, a move that can be considered a double-edged sword for both business and territory. MetaMask's new feature allows you to open your wallet in 2 steps using your Google or Apple account, with your mnemonic phrase automatically managed by the system. But be careful with your password. If you lose it, it's gone.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the Member Wealth Code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.